All right, what's up, guys? Welcome back. We are here to wrap up our Trading Mastery series. We've been putting in the work for 5 long weeks, and it's time to reap all of the rewards. So we're going to be going into a little bit about each week and how we're going to integrate them together, and then we're going to be giving you a great roadmap for how to kind of track your progress as you go about this journey of kind of taking this knowledge that we've gathered and actually putting it into work. So that's what's on tap today. Thank you guys so much for joining. I see people still coming on in. I see my boys DJ 2am and Mike. And let me double check on some levels real quick here. Then we'll get right into it. All right, so we are good to go here. So navigating back to my stuff. There we go. And we're back. There it is. Awesome. Okay, so we are here in the presentation. Sorry about that. So yeah, we've been doing this for 5 weeks now. We've gathered a lot of information on what we should be looking for in terms of our general outlook to trading, in terms of the specific setups, in terms of how to play those setups, in terms of how to manage both the setups and our emotions. And now we're ready to really kind of tie a bow on this and bring it all home. So I just want to take a second and say, congrats on making it this far, because we have learned a lot at this point. Like I said, week 1, we built that blueprint, that framework. Then we got into the actual chart reading in week 2. In week 3, we actually learned a 3-step system that you can take with you wherever you go in terms of actually assessing that a trade is ready to enter and what to do with it when it does enter. We talked about position sizing, how that can kill an account and how it can really, really bring you from a trader with maybe not the most honed in and refined strategy to still bringing you consistent profits, whereas a trader with a better strategy and poor risk management will just be floundering much harder and for much longer. So that's a key component. We touched on that, and then last week we got into the psychology about what makes traders succeed or fail, and how to lean into the aspects of ourselves which are improving our trading and bringing about the best type of our trading, and start to work on eliminating the aspects of our personalities and our character traits that are hindering us. So yeah, today it's all about the implementation. So getting right into it, we're going to be talking about the 5 pillars that got us here. We're going to be going over that personalized and implementation roadmap where you can really track your own progress throughout these different periods. We're going to be talking about like the first couple weeks after this, the next couple weeks, the next month, and the next couple months, so that you won't feel lost or hopeless if maybe it's not clicking immediately, and you'll have some good metrics to see if you're on the right track. So we're going to be building those daily and weekly routines, and we're going to be identifying and avoiding all the common pitfalls that can come with trying to jump into a whole new routine, a whole new strategy like this. And yeah, it's going to be good stuff. This one I think was the most fun for me to work on personally, just because it felt like the culmination of a lot of smaller lessons. And so I'm excited to bring it home here. And I really do think that this past 6 weeks has been a really good crash course for anybody who's either new to trading or just feels like they need to brush up on the fundamentals. So I'm not new, but I can always use a little more of foundational work. I think everybody can. So it was really good for me, and I think there's a lot to be gained from watching this over maybe in 6 months or so. And if you only caught this week, maybe go back and watch the rest. So those 5 pillars that we've been talking about. The first one is that strategy and structure, and it's that written trading plan, which is super key, right? Because all of this stuff can be so abstract, and we can have so many things that we tell ourselves we'll do, like, oh, if it gets to this level, that's a buy. If it does this, I promise I'll sell. And then we get so caught up. So if we don't have it written out, we're very prone to psychologically moving those goalposts as a trade develops, either in our favor or against us. And so, yeah, having that written plan is super key. And obviously, you know me, I think that the major pillar here is always going to be technical analysis, just in a sense of, I think that is the foundational driving mechanism, which is, directly influencing price action. foundation or fundamentals traders hate me, but that it is what it is. I think that their fundamentals don't matter until I see the actual buyers on the tape and that demand. So for me, technical analysis is king. And if you don't know the basics, what are you doing? So we touched on that. If you want more in depth on that, I have a ton of other information out there, a lot of webinars, and a lot more coming up in the next over the next month or so. I'm going to be doing some deep dives into my favorite indicators. We're going to be talking about Bollinger Bands. We're going to be talking about ATR and Camarilla pivots, how to trade those systems, how to trade my trigger system, and a whole bunch of other stuff going on. So that's on the horizon there. But for now, I'm sorry, we're still going over the 5 pillars here. So back to pillar 3, trade execution. Trade execution is obviously very, very important. And if you can't do this, it doesn't matter how good your systems and your technical analysis are. So great stuff for that. What we worked on there, I think getting that 3-step system in place where you don't have to be overly stressed out because you've already identified the setup with TA. And now you've already identified like exactly where you're entering, where your stop will be and everything else. And yeah, so that's a huge component here, building this all together. Risk management, like we talked about, yada, yada, very important. And that mental game. So in terms of what you should be kind of retaining from each of these pillars, I just wanted to kind of go over the bullet points of each and just keep them fresh in your mind here as we move forward. So key components to be reminded of in terms of that blueprint that we've talked about, I would say are that you should have a framework and like a time frame, so to speak, for this kind of stuff. So if you're doing what we talked about in terms of keeping goals, then you'll be seeing on a week-to-week basis, you'll have like a fresh batch of data to kind of analyze. And you'll see, okay, was I making more profitable trades than not is obviously most important. Well, most important is how much money you made. The second I'd say is, are my trades in general good? Is my system working? And, by being able to actually track these week to week and even day to day, you get a really a much clearer kind of trajectory of where you're at, and you'll know what needs to change. And if something does need to change, or if you're just having a bad week, but overall in the course of the month to month, you're doing fine. So another part of this blueprint is going to be the market selection criteria, which I don't think we've talked about yet, at least not today. And so that's just being able to kind of look through the broader sectors and take an over kind of arching view of the market, a macro snapshot, so to speak, and use that to frame your bias. So for example, SPY, it is at the top of a major range. I think it's breaking out. What makes me feel more like we're breaking this range and not, ready to pull back is that so many smaller sectors and so many other components of bigger ETFs are starting to work and break out together. So by kind of gauging the overall market and saying, well, I think breadth is increasing. I think we're going to be seeing more stocks breaking out over their 200-day, over their 20-day, over their 10-day moving averages going forward. So if I think that, I should be bullish overall and looking for opportunities in the market. If I think that we are, seeing kind of some muddy action up at resistance, maybe I'm more inclined to play mean reversion and just play this range until we get a break of the range, that kind of thing. So just using the general overall market health to direct your biases, even intraday, is very, very important. We talked about the entry and exit rules and how crucial those are. If you're not framing a trade before you enter it, you're just going to be kind of lost. And it's just a dangerous game to play, not knowing where your stop is when you enter a trade. I've seen it happen so many times where somebody says, well, around this area, and then it gets to around this area and they say, well, because of X, Y, and Z, actually my new stop is down here, but it's still a mental stop. And, that happens 3 or 4 times. They blow up an account, and hopefully they learn, but a lot of people don't. So if you can just not do this, you'll already be better than you'll just level up instantly. So good stuff there for sure. I'm just catching up in my notes here. All right, cool. So going forward to the actual reading of the charts, just in terms of cliff notes for that lesson here, what we kind of achieved there was support and resistance identification. So basically, just being able to label and see on the charts areas of congestion, essentially, of where the chart has difficulty moving forward or moving through it. And essentially, these are areas that are pivots, and that you just need to keep a watch and an eye for in terms of how price action interacts with them. So there are a lot of small tricks and tips that we talked about in terms of gauging whether a support and resistance is holding or breaking and how to play them accordingly. Super like fundamental skill for any trader is to just be able to identify if we're seeing accumulation or distribution happening in a range. So you can do that very easily, or at least more easily, by watching interaction with these resistance levels and zones. We also talked about trend lines, and if you know me, you know I don't trade off of them super heavily. My rule for trend lines are they have to be glaringly obvious and on everybody's screens. You know, if it's not a line that everybody's drawn, like between 3 points high in a pennant, for example, in a big triangle, right? If it's not like something super clear, I don't really care about it. The one that I do care about is what I call doom lines. I think that's a Tim, the stock pattern pro guy's terminology. But essentially, the one downtrend line from the very all-time highs, just all the way down, you know, and through all the up to all the wicks that popped up. That is a very important one I've found for breaking overall momentum. If you're bottom picking, besides that, I think that they just have to be very clear, and that's kind of a rule of thumb for any level that is in any way subjective. So because trend lines, the level of interaction will change every day as the line moves, you know, horizontally as time goes on. They're just less reliable and more open to interpretation. A horizontal level is an exact price where something was bought or sold heavily in the past. When price returns to that point, there will be buyers or sellers at that point. With trend lines, it's a lot more arbitrary. So just, you know, give them a grain of salt, but still important to have on your charts. So we talked about some essential chart patterns like flags, cup and handles, general consolidations, triangles, stuff like that. If you like that kind of thing, go and check it out. If you don't, I won't bore you with it now, but I'm a big pattern guy in the framework of, I know that most of them fail and a lot of the patterns are set up to trap traders. So I'm a big about combining pattern trading with overall directional bias and, you know, basically figuring out where the resting liquidity is and figuring out how a pattern will target that. So if those are in alignment, then I think that patterns are essential, at least an essential component of a trading strategy. And yeah, we also just went into some more less super specific, but, you know, just generalized topics of price action interpretation, how we should read different price action as we get it. So if any of this sounds up your alley and you missed that week, go check out week number 2. It's a good little summary of my general outlook on TA. So moving forward to pillar number 3. This is the 3-step framework part. So we had the first step, which was identifying a setup and just what, you know, basically giving very, very regimented metrics that a setup needs to achieve to be valid. And so this is super good because essentially we are not just taking big old swings at anything that comes across our screen. We're being discerning. We're looking for the best setups. We're also just acknowledging that we're trading from a place of abundance, right? We don't care about missing any given setup. We don't care about anything, because we know that really good setups based on our parameters will come on a very regular basis. This week I've been talking about, you know, I've been trading these baskets of breakouts that are just working so well. These swing trades of momentum, like nuclear in the space sector with ASTS and quantum. And it's just been amazing to me watching how when a stock is working, like it is in a confirmed uptrend, like these baskets are, they give you so many entries where they just come back to a key level of equilibrium or support, you know, previous resistance flipped to support. And even these high flyers are giving you so many looks to get in a way that met all of my criteria. So for me, I trade my trigger system a ton, and I love when these stocks are in an uptrend and they essentially will intraday, usually in the morning, sweep down and retag their hourly trigger. And very often they will do some kind of basing action around there. And then they will reclaim the shorter term triggers, the 1 and 5 minute triggers. And I get a super clean entry on the back test of those triggers that are now supported by that bigger hourly trigger. And so by just learning that is a setup that works really well for me, I honestly don't trade much else. I either trade those or I trade failed breakdowns, which are usually the same kind of thing, either on that hourly trigger or on a lower daily trigger. So that's how I identify setup. And just by doing that, my win rates improve dramatically. And it's still something that's in development. But yeah, it's continues to go well. So I'll continue to practice diligence in my my setup, like how clean a setup needs to be for me to take it. Like if it's missing a few criteria, I just feel fine skipping it nowadays, which is really freeing. So step 2, we have the entry confirmation, which is when to pull the trigger. So for me, I talked about when it crosses back over that 1 and 5 minute trigger and back tests it and shows that there are buyers. They are flipping that level from previous resistance to short to support and showing that short-term momentum is back up bullish in an overall bullish stock. Let's see. Seeing some questions come in. If they're real quick, I'll just answer them as they come up. But otherwise, we'll have a Q&A section at the end. So do I trade the Euro USD? No, I do not trade much Forex at all. I just feel like I don't have a strong edge there. I feel like it's very prone to multiple macro factors that I just am not in the loop of. Like when I'm trading, if I'm trading the euro, then essentially I have to be aware of what's going on with US equities, but I also have to be, or well, at least the dollar, and I have to be aware of what's going on with European policy and anything that might be affecting them geopolitically. So no, I do not, but good question. I like to stick to things that are, using my framework here and very just regimented. So if the euro filled these criteria, I would probably take that trade, but not as a rule, I don't. So step 3 here is management and exit. So how to maximize profits. And so this is things like I was just talking about on Trader TV on these trades like OKLO or ASTS, as long as they're holding over the 9-day or the 20-day moving averages, totally fine. I'm going to let the runners work. If they come back to those levels and hold, then I'll add some. If they come back to those levels and break through, then I'll cut the trade for still a good win. But in general, sticking with winning trades will be much more profitable despite some stop outs than just selling because it seems strong. Like wait for a stock to really show that on a higher time frame it has a reason to slow down before you hop out of a really good trade. If I listen to this rule that I now have for myself, even as early or as soon as like a year ago, I would still be in hood and Roblox from $10 and $50 respectively, that kind of thing, So just being able to hold these runners can give you so much juice in your portfolio. Kratos, KTOS, that's another one that kills me. It's like, I knew it was so strong. All I had to do was hold. But you live and you learn, and that's a big one for me. So that's the basics of the 3-step framework there. Another really good one to go over and revisit if you missed that one. Very practical advice there. So going on to pillar 4 is that position sizing. Essentially, we talked about the 1% and 2% rules. That's essentially if you're a new trader, you don't want to risk more than 1% on any trade. If you're a little more experienced, 2% is okay. We talked about where to place stop losses and most importantly, just how important they actually are. We went into the actual calculation of position sizing. We went over how to use a position size calculator. Trade the Pool has a great position size calculator as well. So definitely give that a shot. Really good for knowing the exact amount of shares you are allowed to buy in any given stock, and just before you enter the trade. Takes a lot of the thought process out. And we also talked about portfolio heat management, which is basically balancing your exposure so you're not overexposed to one sector, and also just how this can avoid a max drawdown day of every single one of your 4 positions getting stopped out for 2%, right? That would still be not great. So you can avoid that by balancing your exposure in different sectors. And I think that that's a great way to just also catch the rotation between these baskets. For example, I'm only in momentum baskets right now between crypto and quantum and space and nuclear, but you'll see kind of distribution between, or I should say, cycling of liquidity between these baskets day to day. So, for this week, it's been kind of like, okay, nuclear's up a little, space is up big, then space is up a little, nuclear's up big. So I've been able to kind of trade back and forth. And not having all my eggs in one basket allows me to kind of take profits on different positions every day, and then usually re-enter some of those positions every day as well. So moving on to the mental game, pillar number 5. This is all of the psychological foundations or components that build a good foundation for trading. So talking about pre-trade routines and checklists that you can go over to really maintain a good framework and a healthy mindset every single trading day. And if you're not able to do that on a given day, you'll be able to recognize that and say, hey, I should pump the brakes. So we talked about some emotional control techniques, breathing techniques, just mood management techniques, and like panic response control techniques. All of these are very helpful in the course of a trading day, because when when it comes down to the wire and those trades are really stressful, your performance will be directly correlated with your profits in terms of your emotional. Obviously, if you perform well, you profited. I'm saying if you're able to control your emotions well in these stressful times, that will reflect in your P&L very, very clearly. So we talked about how to analyze habits post-trade so that you're able to kind of identify weaknesses in your game and give yourself credit for when you're doing the right thing, and that'll help build on both sides of that spectrum there. And then we talked about building discipline just in general and some systems to do that as well. So if any of that seems up your alley, go and check that out as well. That was just last week's. Looks like I have an extra slide in there. There we go. So the integration reality check. I just wanted to talk about kind of where the rubber meets the road in taking all of this from a system, which when you have idealized in your head, or if you haven't been putting into practice, can seem very like, if not too good to be true, just like a little bit of a wishful thinking in a sense that you probably haven't. You can only see how it could work out great, and you couldn't see many of the drawdowns that you could encounter when integrating this into your game plan. So I just wanted to talk about some issues that can happen whenever you're jumping into a new system. So using only some of the pillars instead of all 5 are going to lead you into some hot water, because they kind of work in tandem, and it doesn't really matter how good you are at some of them if you have really big weaknesses in others. So you got to kind of start, just trying to implement them all. I know it can be overwhelming, but that's why we went week on week. So they've kind of had time to simmer, but now it's time to start using them cohesively in the ways that we're talking about here. So for example, your TA can be good, but if your position sizing is bad, I've done this with multiple prop accounts where it's like, well, my TA worked out perfectly. It just wasn't quite perfect enough. I needed a little bit more margin for error, and the trade eventually would have been a huge winner, even with a small position size. Instead, I sized too big and got stopped out, and got a slap on the wrist for all my trouble and my accurate TA. So got to use them all together. Another issue is skipping individual steps just when you're under pressure, and not using the system when it matters most. So that's something I see very often, where people will be good at stopping out if they're already nice and green and things went pretty well overall, but they're much worse at stopping out when a position immediately goes against them or chops them around for a while and then goes against them. So I think that it's very important to remember that these rules are there for a reason, and they're there to protect you. So just keep hammering them and they will do their job. But if you don't respect them when you need them most, that's a recipe for disaster there. So, and just it kind of leads into the next point of inconsistent application, because really, that's what this all is. It's just picking and choosing when you want to apply the system and the rules. And, this just doesn't work out in life in general. If you think you're the exception to the rules, that's not how a society functions. So that's not how a business will function successfully. And you do have to think of yourself as a business, which we'll be talking about coming up here. So first off, I want to talk about the flow of all these 5 here. So we have the plan, which defines your rules and criteria. The technical analysis finds the opportunities. The 3-step framework executes the trades. And the risk management protects the capital you're investing. And then psychology maintains consistency overall as you apply the system day in and day out. So let's talk about some checklists that we can do to kind of help frame you for success using all of these systems together. Because I know it's like a lot of frameworks and a lot of checklists and stuff. And if you've been doing your homework every week, then it shouldn't be too overwhelming. But That's why we're bringing it all full circle here today. So before every trade, this is what you can do. You can make sure that the setup meets your trading plan criteria that we talked about in week 1. Then you use the technical analysis to confirm that opportunity. The three-step framework will give you the exact signal for entry. Your position size has already been calculated. You already know if you're a 1% or a 2% trader based on your, your experience, more or less. We already have the stop loss placement determined, and we have assessed our mental state, and we basically, it looks like the last line got cut off. And basically we're in tune with ourselves, and we are, keeping like an open line of communication between our mind and our body. We're not overwhelmed in trying to place too many trades or too scared to place any trades. Those are both things that I see frequently. And so essentially we just need to keep our mind in our mind, if not at all times, definitely before every trade. So just check in with yourself and make sure you're good. All right, so we have a few routines here for when we're actually in the trading day as well. So we talked about what to do before we enter a trade. Let's talk about what we do before the market opens or as the market opens. What we should be doing is reviewing those trading plans and goals and analyzing overall market conditions like we talked about earlier. So in general, are the indices moving up? Is it being led by certain sectors? Are the sectors leading risk on sectors or risk off sectors? Like, are we trading into major resistances or supports? What's the kind of overall outlook here? And so you start to build your plan and your biases. So you identify potential setups. We talked about how to identify those in multiple webinars previously in terms of scanners or anything. So if you're looking for something specific, it's probably there. But once we have our setups identified, we also just want to double check the economic calendar and make sure there aren't going to be any big intraday catalysts which could derail our trades. If there are, you can usually wait till after, usually about half an hour to an hour after these events, things start to settle and become tradable again. Often you will get good entries by waiting for these events. Sometimes these events will happen and there'll be big bullish catalysts and your trades will break out without you. So a grain of salt trading around big economic days, but they should always be on your radar as a day trader and just a trader in general. So that's the first 30 minutes into open is what I do. You could also do that after open, I suppose, but you might miss some good trading. So during trading, you got to follow that three-step framework religiously. Remember, the system works if you work the system, right? So you gotta keep doing the work, and it'll keep rewarding you. If you stop doing it, you get nothing from it. So we use that pre-trade checklist we talked about, and we're just again being very systematic with all of this, and that's what's going to lead to consistent gains. We also have our trading journal going on. So every day and ideally for every trade, we're just going to note like how we feel after we take the trade. Like, did we follow our plan? Did it work? Just kind of a quick overview. It doesn't have to be more than a sentence or two, but we want to have kind of a snapshot of day to day and week to week, how we are feeling about our trades and how they're working. So that's going to be really helpful. And then just you gotta monitor your risk exposure throughout the day. So if you say you take a position and it starts to work and the market comes down overall, you're like, oh, this is a good dip to buy. I'm going to take a different position in a different stock. And then you find yourself kind of accumulating positions, and then sure, overall, maybe the day goes back to VWAP or something. But if you're not getting out at any kind of equilibrium like that, and you're just staying oversized, you can really get hurt on an afternoon move that doesn't go how you expect. So I find this happens a lot more frequently than people like just sizing too big on any one position, but it's that kind of accumulation that'll kind of get to them where they aren't cognizant of the additional risks they're taking on. So because of that, you just really got to keep diligent about that. And I think you should never be in more than 4 stocks at the same time if you're an active trader. And if you're a swing trader, totally understandable. You have much larger windows and larger margins for your stops and your targets. You can let the trades kind of breathe and cook. But when you're day trading, and especially if you're like actually day trading and need to be out by close, you need to be ready to react to what's happening right in front of you. And it can always, it can always sideswipe you if you're too heavy on one side of the tape and not actively trading around core positions. So that's what you got to do during the trading day. That's your routine. And then after market close, just really quickly for 10-15 minutes, just review all your trades. Like I said, you don't have to do a lot of heavy analysis, but you just want to kind of touch base with what you went over during the week. You want to update that trading journal if you haven't been doing it as you take the trades, and then assess your emotional state and add that to your journal as well. Like, how was I feeling today? Like you can literally do like score 1 to 10. You can do, I don't know, smiley face, whatever you want to do, but there should be some kind of signpost for any given week or day about how you were feeling, because this game is really all about managing emotions. So, I think that's a good overview of what to do at market close. And of course, plan for tomorrow. If you see any setups that didn't quite hit your, come to your entries, maybe you're looking for them to come a little lower, or for those moving average entries to catch up then the next day, and you can get your entry then. If you think a stock is strong and due for more expansion, but was under consolidation today, that should be on your focus list, stuff like that. So that's what you're going to do on a daily basis. And now we're going to talk about what to do on a weekly basis. So we have a few things that we should be touching base on every week. And that is, first off, just analyzing the week's performance. How did you do overall? What's your hit rate like? Are your ideas generally working out? Are you just not sticking with them long enough? Is that the problem? Is the problem that you're just identifying poor setups? Let's see. Captain Sunshine, 4 stocks at a time. Okay, so I'm talking about active trading here, like stuff I got to watch intraday. A-Lab, we're letting that guy cook. Don't you worry, brother. I'm still in A-Lab. I think it had a good day yesterday, at least. I think today. I don't know. But yeah, for those positions, I have managed the risk though. So if I get stopped out, the order's already in. So I don't have to actually do anything, so that takes a big mental load off. For other trades like coin or CONL, for me, I'm up 140% on it. I'm down to a quarter of the position. I don't really care what it does, because the worst case is it hurts me a little short term, and I think it still pays long term. Very worst case, like it literally, I couldn't not be in profit. I could ride that to zero. So, for stuff like that, the risk is already baked in, so I don't have to think about it. If I'm in 4 stocks intraday, I better be on my game and sharp, because that's a lot of decisions to make. Usually 1 or 2 is my ideal, way to trade. So don't worry, I haven't abandoned you in A-Lab. That thing is just taking its sweet dang time, I gotta say. But it'll get there eventually. It's still solid structure. The longer the base, the bigger eventually the eventual move will be. Anyways, back to a weekly trading routine here. So we talked about analyzing the week's performance. We talked about reviewing our trading journal entries throughout the week. We can identify patterns by going over this data, and then we can, plan for the week ahead how to address these patterns of of issues that we're seeing. So we'll update the trading plan if needed, and that will come with the pattern identification. If you need to update it, it'll be apparent in analyzing this stuff. And doing all that, you set the next week's goals and you lock and load. So let's talk about the roadmap for implementing these ideas, because it won't all happen at once, and you shouldn't try to force it. Let's see. So in the beginning, the first week or 2, I think it's a good idea to paper trade this. I know it's boring, but it'll just get you that confidence you need. And the worst thing that can happen is that you'll be like, man, this is working too good, and I'm mad that I'm missing out on real money. And then that's just a sign that, hey, what does it matter if you quote unquote wasted 2 weeks if you confirm that the system works? So we're confirming that the system works and that we can trade it. We're doing that by paper trading. We're using all 5 of those pillars that we mentioned today, and we are focusing on the process and not on profits. So like I said, the profits will come if the process is correct. Otherwise, you're chasing profits. You're in a inherently unstable emotional state. You will be doomed to fail eventually, because variance will come and you will not handle it correctly. If you focus on the process and not just chasing, the biggest gains, that's how you actually build a foundation and can progress and compound your get that compound interest and compound your gains very consistently. So that's what we're all about: tracking, integration, consistency, and consistency overall. So the daily goals for the first 2 weeks are 3 to 5 paper trades a day. We don't want to be over trading. We want to have every aspect of our checklist completed before we take those trades. And we want to journal every trade. So if we can do this and practice routine adherence, then after a couple weeks, we can move on. But ways that we can track our success in this first 2 weeks are: can you execute the system without thinking? Do you have to is it agonizing for you, or are you able to just do the thing because it's on your screen? And is the checklist becoming automatic? That should be a really good sign, where you don't have to overthink this. Like I said, it's just like, this is what I do. So you will see, if you do those two things, that your emotional reactions will decrease. And sometimes you'll find yourself even laughing because price will do like one of those FU moves, and you're like, well, interesting to see how they're shaking the people at this level and now coming back to this deeper support that we were looking at. It'll be starting to be framed less as less of a personal thing for you, even if you're in the move and you get stopped out, because then you're going to be like, okay, I think I know what they're doing. I'm going to wait for my spot down here. If we get it, we get it. If not, well, then to hell with the stock, So yeah, it makes everything less personal. So going on to weeks 3 and 4, your mission will be to trade with real money, but just in smaller sizes. So 0.5 position sizing is good for safety, never risking more than 0.5 of 0.5% of your port on any given trade. That's how we're measuring these sizes, by the risk. Doesn't really matter what the actual position size is. It's about how much we're risking versus how much we're potentially gaining. So yeah, I'm not saying 0.5% of your port is what you can use to buy a position. I'm saying you can only risk 0.5% if you get stopped out on that position. So maintain the same process discipline that you started to implement in the first 2 weeks there. Just keep that going, and just keep monitoring the emotional responses, because there will be fluctuations, but overall you should see stabilization and improvement over time. So the daily goals for this next 2 weeks are 1 to 3 live trades a day. We don't want to overdo it. We want to really look for really good setups. We want to execute a perfect process. We don't want to be straying from it. We just want to stick to the textbook setups. If we get them, we get them, and we take them. If not, we don't need them. And right after we trade, we want to analyze the trade and see how that goes. I do it at the end of the day, because sometimes immediately after, it's a little too fresh if it's a loss, and maybe I won't be thinking 100% objectively, even if it's a big win. So again, we're just going to keep tracking that emotional state, making sure we're on course there. And if we're on track, then we'll see that we've maintained our consistency that we established in the first couple weeks. And we've demonstrated that we do have that emotional control, because those emotional reactions will be reduced overall, and we'll be less emotional day to day. And then we'll also see, obviously, positive risk-adjusted returns. We'll be Sorry about that, guys. Hope it was just the last minute here. Can you hear me now? Still no audio. Okay. Let me troubleshoot here. Okay. DJ says we are back. Let me know. Okay, good now. Excellent. Not sure what went on there. So let me know. Okay, I'm just going to go over this slide, and if you guys missed more than that, let me know, and I can go back to that too. But in the second month here, we're going to be talking about scaling up to full position sizing, either 1 or 2%, and that'll be based on your proficiency as a trader. We'll be talking about implementing the daily and weekly routines, which we mentioned in this week as well as the previous week. So if you're hazy on what exactly that entails, just go back and check those out. And then we're going to be tracking comprehensive performance metrics as well. So we're going to go into this in a little more detail in the next week or two. The other great thing is that if you're on Trade the Pool, all of these metrics, they're already baked into their software. So it automatically compiles these and you can just check in on them week to week. It's a great tool. So you can check that in account performance, I believe is the tab. Really, really good stuff there. I love stats. So I love looking into all of these details about how my trades are going and seeing what insights I can glean from that. So in the second month, we're also going to be refining our system based on results. So we have the core thing here and we have some data to work with. And based on the data, based on the results, we can fine tune our system. Maybe we're getting stopped out too much but the ideas are okay. So we are realizing, okay, we have to widen our stops a little bit and maybe implement some different rules in terms of waiting for candles to close through a level before we take a loss or something like that. On the other hand, if you're seeing that you're giving back a lot of profits, it's probably a sign that you need to work on your stop, your trailing stop system and where you're getting out of winners. So, just use the data to inform what you can adjust going forward. The weekly goals are going to be 5 to 10 trades per week. So you can, you don't have to trade like crazy. You can just wait for 1 or 2 really good setups a day, and that's all you need. You want at least 95% plus process adherence. Every once in a while, there's always an exception that makes the rule, but in general, we're still in the period here where we just want to keep on drilling the system. So along with this, we'll be doing more detailed performance analysis and continuous refinement of the system. Just whatever we need to address, we will address, and whatever needs to be addressed will be clear in the data. So if we can do this successfully, what it'll look like is consistent profitability, drawdown management, and confidence in the system that we're trading. And this should just continue on going forward here. So, we're just really doing the same thing going forward 3 months plus here. Just the only thing that really changes is we keep honing it in and we keep kind of personalizing it where we have our base system. And now we can say, okay, well, over the past 3 months, I've noticed this or this, and it fits my style better to do this a little differently or this a little differently, which is totally fine, but it's important to have the foundation to build off of. So you'll have quarterly goals as well, just like you have the daily, weekly, and monthly goals. And at this point, we're just trying to optimize the system and benchmark our performance. So we have good, benchmarks to gauge our success off going forward. We will be able to adjust our risk parameters as well slightly. We can start to size up if we're noticing that we're really discerning in our not only our trade execution but also just our setup selection. And so then we can move up into bigger sizing. But again, this only works if the data supports it, and that's why the rules are there for a reason. So all of this just will continue building and do a more comprehensive trading education, and you'll just keep on moving up from here. And it's really cool to see traders do this. I've seen it happen every year. There's like a new batch of traders who've evolved and figured this stuff out and become consistent. And I do think that everything we've talked about in the past month and a half is kind of the culmination of what I've gleaned from watching this for about 7 years now. So I think that this, if people stick to this, it'll take just about anybody from inconsistency to consistency. And I think that's really all you can ask. We're getting you in that top 10% of traders. And then that's where your own personal systems and your personal strengths can really shine in there. So I think that this is pretty much the most of what I want to talk about in terms of what to do. So now we'll be talking about what to avoid a little bit, and then we'll wrap it up and take some questions. So a few common pitfalls are the first being strategy hopping, moving from one thing to another. So essentially, if you're not sticking with any one system, you're just kind of prone to not dialing in on it and just being like a jack of all trades, but a master of none. So we're starting out with mastering what is in our sphere of the sphere of our system, and then we can progress out from there. But first, we got to get that mastery down. So stick with the system for now. Don't try to chase better strategies. You'll always get these grass is greener moments, and usually you'll end up chasing your tail. And you'll realize that most of these systems work if you can stick with them. So I know what works best for me, and now I'm just drilling it. Commit to it for 6 months and see if it works for you. I'm almost positive it will. Almost everybody who it doesn't work for stops doing it before they can be consistent with it. So very common. The next thing is unrealistic expectations. Just thinking too much will happen too soon. So if you're expecting instant profitability, sorry, that's not really how it works. You got to be able to identify what is causing your setups that you're taking to not work before you can start taking the right ones consistently. So we've definitely done a lot of the legwork to getting you to that point, but still it comes down to your own personal chart interpretation. So that just comes with time, and you gotta be kind to yourself in the learning phase, because it's a very hard game that you're teaching yourself. So a lot of people will compare it to social media traders. This is terrible for multiple reasons. The first being most of them are scammers, trading on paper trading accounts where they can be insanely risky and only show the wins. It falls under the larger umbrella of reality distortion that comes with social media. Everybody on Facebook for 2 decades now has been sharing their highlights and not showing you the realities of their lives. So it's the exact same thing, but even exponentiated in the trading community, where you'll have people who are telling you they're making tens of thousands of dollars a week, and in reality, they are not making any money off of trading, or they're only making money off of selling subscription services or something. So one of the one of the biggest signs of a financial, like a fake financial guru, a furu, is that they're always talking about their service, but they're never actually spending that much time on the trading, it feels like. So if there's one thing about me, it's I spend most of my time in the charts. So yeah, don't expect too much too fast. Don't compare yourself to people on social media. They all suck except for me. I am great. The solution is focus on the process and not the profits. I'll keep saying it because it's still true. So going on to the next one is just inconsistent application. Skipping steps when you're under pressure will kill you. I know it because it's happened to me multiple times. There's so many times in the past where I've been like, oh, well, I know this is a rule, but I'm really stressed right now. So this one time I'm going to break it for X, Y, and Z. Usually the reason I was so stressed is the same reason why I needed to stop so direly, because things weren't working. And if what things aren't working, that's a sign that you need to protect yourself. So you just got to have a rigid adherence to the system, and it'll show in the results that it's worth it. So to trade successfully, you need to think about this like a business. You need to make business decisions. You need to not operate on emotion. You need to think about, will this increase shareholder value? Just like in a fundamental analysis, is management doing the right things to make this company worth more money? So you got to keep that detailed trade journal. You got to keep receipts. You got to, have your tax prep documents ready to go. Don't get sideswiped in April. Have the stuff ready a month or two in advance so it doesn't stress you out. It will stress you out because there will be things you didn't think about until it actually comes time to do it. So yeah, and then performance tracking spreadsheets are great. Just any kind of Excel spreadsheet or anything that can track it. I actually just, for right now, using the ones in my Trade the Pool accounts, and it's really comprehensive. There's a lot of great features there to track performance, and that helps me a lot. So just any kind of overarching, just bookkeeping, so to speak, so you know where you're at any given time. So another aspect of that comes with thinking like a business owner is just scaling considerations. So you gotta think about account size milestones, and like when you hit a big milestone, it's probably a good time to size down and just go a little more risk off, just a little more analytical and a little less gunslinger. And position size progression is important as well. So if a trade is working in your favor, you can keep adding to it. When it stops working as well, you got to size down. Just trading with the ebbs and flows in the market like that, being realistic and not banking on your emotional feel on a stock to dictate how you manage it. And just evolving that risk management. So as you learn more, you'll start to get a better feel for the types of stocks you trade and how you should manage the risk. But in general, if you stick to the rules, you'll be safe. So I wanted to talk about just an overview of some tools that you can have in your toolbox that we've talked about either briefly or in depth over the course of this course. And I just wanted to kind of have them all in one place for you, so what it's kind of like building a repository of useful features. So like on my note-taking app Notion, I have actual links to all this stuff just in one place. So just it's all there waiting for me. So I have my trading plan. I have a position sizing calculator, just so very easily I can see what my plan is, see how big of a size I can take on any one thing. I have my trading journal. I have the daily and weekly routine checklist there. And then I have, well, actually, I don't have this, but it's a good thing to have a chart pattern reference guide. So just, some cheat sheet type of thing. So you can say, hey, this looks familiar. Let's see if it fits this template. And then some psychology self-assessment tools are really good as well. Just like little things that can kind of help you get in tune with yourself. For me at this point, I just do like a 5-minute meditation, and that can help me kind of, with the intention of saying like, I don't know, I want to get more mental clarity about how I'm feeling right now. Like just a little bit of introspection will kind of help me self-assess. There are also like tests online and stuff to kind of help gauge your feelings, or you can even ask ChatGPT or something, say like, help me assess my psychology right now regarding trading or whatever, and it can give you some good prompts to help you thinking in the right direction. So I also want to talk about your support network, because it's super, super important to have one. Trading is a very isolating job. You're sitting at a desk alone all day for the most part. So that's why I think that trading communities are so cool and often so vibrant, because you guys, you've got a lot of love to give. You're sitting around here, you're like, I want to share this niche obsessive hobby I have with other people, but we're all sitting in, computer rooms staring at a screen all day. So I think that that can lead to a lot of really interesting discussion and great communities. We have a great one at Trade the Pool. I also have a great Discord community myself as well. You can find that under my Twitter handle at Steve Tileman, and at twitter.com or whatever the heck, so yeah, that's where you can find all of us. Come join us. We are there for you. You are there for us. That's kind of the whole point. We are trading against ourselves, and our community is on our team, So, yeah, that's what I'd recommend. It's really, really good to join any community. If you already have one, that's great. If you need more, they're out there. We're waiting for you. But people will help keep you in check when you're over exuberant, and people will help you from sliding out of control if you're, on off the rails there. So just really good to have people around you that care about you, and it'll just lead to success in any avenue of life. So trading's no different there. And your personal action plan, sorry, these are not updating here. Essentially, you're just going to be figuring out how you can implement that roadmap that we gave for you specifically. So maybe there's a few things that don't work perfectly for you, or you would want to amend them a little differently. Just think about how that rubric aligns with your goals and try to find the happy medium there. But in general, you just want to keep on building towards the next step of just complete integration there. So yeah, refer to that weekly roadmap that we went over maybe 10-15 minutes ago, and that'll be a good kind of guide for that. All right, so I wanted to also talk about how to measure this progress as we go about it here. So in general, we're going to be talking about the metrics that we're getting from reviewing all our trades, from our trading journal, from the emotional check-ins of that journal, and then just going forward from there. We can I'm sorry, I had more points for you here. Let me just pull them from my notes here. Almost there. All right. So essentially what we're going to be talking about here is the metrics in which we're looking for. So for win rate, we just want to be targeting over 50%. We just want to be winning traders. That's a good place to start. There are exceptions. Some people are breakout traders and they only hit 3 out of 10 trades, but they're profitable overall. But that's not the system we've been learning. And in general, I think that it's going to be a little bit easier to just keep it simple in this regard for while you're first starting to track here. So you're targeting over 50%. Your risk reward. Whoops. Sorry, I'm trying to get myself back on screen here. There we are. Okay. All right. So your risk reward ratio is ideally 2 to 1. So reward to risk ratio. So you want to have your winners at your winning targets on average be 2 times the size of your stop outs. Maximum drawdown is less than 10% overall. And in general, I would say a lot less. So in general, you want to keep drawdowns minimum while, obviously targeting greater, and using that 2-to-1 risk reward will kind of keep you in the right ballpark when you're starting off here. In terms of monthly consistency, you want in general to be profitable most months. A month is a large enough time frame for most traders to kind of have their skills expressed and reflected. So if you're not making money overall most months, you need to start tweaking your system and figuring out what's going wrong there. So let's see. I'll jump back to this. There we go. Just for some final reminders here. So it's really important to have some key mindset shifts, and these kind of key aha moments are what's going to really propel you to the next leg of your trading journey. So I said it backwards. Process over profits. So it's super important to just run the same drills and get the habits down, and then the profits will come. Consistency is more important than perfection. It's really important to, like I said, just keep hammering those things. And even if you're not doing them perfectly, just doing them good at the beginning will make you do great later. And eventually, maybe not perfect, but you'll keep on refining the system there. So learning over earning, very catchy, right? So just it's the same thing. If you focus on the process and learning the whys, the results will follow. And patience over speed, because this stuff does take time. There's so many concepts you're integrating, and it's a lot of kind of subconscious factors that you're integrating as well. And it takes a long time for that to kind of come to fruition. For most traders, I'd say it takes a year or two. Some traders can do it as soon as 3 to 6 months. Some it takes 5 years plus. So be kind to yourself and keep grinding. If it's something you're passionate about, I believe that's all it really takes to stick with something like this long enough to get great at it. So those are the kind of final reminders of the series. If you'd like to keep on continuing your education, I have some good book recommendations here for you. Trading in the Zone is always my number one recommendation. It is very light on technical stuff, but it's incredibly heavy on risk management and, most importantly, psychology. It completely changed my trading game. A lot of the ideas that I say are from that, but he goes into way more detail. So highly recommend checking that out. Market Wizards by Jack Schwager goes over the trading style that I'm primarily trade in my swing trading, the overall kind of slim trading style. So a lot of great features with amazing traders in that. It's a really nice read. The Tao of Trading by Simon Rhee is another really great fundamentals trading strategy that I pull a lot from. And the last one is Technical Analysis of Financial Markets by John Murphy, which is just another classic. So that should give you some nice reading to look forward to if you just couldn't get enough. And I'll probably be doing in-depth coverage on some of these books as well, because there's a lot of good stuff to talk about in them. In terms of what we have left, not much, just questions and answers. So I'll start going through the starred questions here, and then you guys can start adding any questions that you might have on top of this. And before I do that, I'm going to go do my handy dandy water refill. It seems like I always drink a ton of water during these things. So I will be right back in about 1 minute and hopefully see some more questions here. Thanks, guys. All right. We are back. Let's get into some start questions. All right. Mike wants to know about using the ATR indicator more. I will give you a little sneak peek, and then we're going to be doing a full lesson on it later. But actually, you know what? I'm going to make you wait because it's coming up in 2 weeks. I don't want to get too into it, but in general, ATR is very, very useful. You will see why, but in general, that is a major component in my profit-taking strategy. So we will be talking about that shortly. Okay, Scott, any stock scanner? Yes. Look up my volatility contraction patterns webinar on Trade the Pool. And that's the one that I use most frequently for swing trading. It gives a whole everything you need for the scanner, so you can implement it yourself in TradingView or Thinkorswim or any other system, and it'll give you nice alerts on any stocks that are coiling on over key moving averages and contracting in volatility, ready for an expansion move. So great for swing trading. For intraday stuff, I mostly use top volume, top percentage gainers, and just play momentum on those. But that's just scalping stuff. So a little bit different. Do I use any tax-related software such as TradeLog? I actually don't, but that's a great idea. I should look into that. I just I keep all the documents that my different brokerages send me, I kind of keep in one place, sell starred in a certain folder, and any forms from trading like foreign stocks or like SVIX or weird stuff that requires different forms or whatever else. Just kind of compile all of that, and then come tax time, I make it my tax man's problem. But in general, just having it ready to go makes his life easier at the very least. DJ2AM asking, do you keep track of your records for trades this month? So yes, I do. I have a spreadsheet that I keep updated. I actually need to update it. It's been a couple weeks, so I'm looking forward to doing it for this month because we've had a lot of big winners. But yeah, it's really good to have. I just have like an Excel spreadsheet where I can put the name of the stock and the price that I bought it at, or at least that I mentioned it at. And then there's an area for notes, and then the percentage change since then. So that's really nice and keeps me honest. Using saying, do not give ChatGPT right access to your brain. No, read only, but and do not use a chatbot as your only friend. Don't use it as your only friend. No, that's what the support is for. That's what the communities are for. It is good for not parasocial stuff or like convincing yourself it cares about you, but just for bouncing ideas off of yourself. And it is good, I found, at provoking introspection. So some of it's actually pretty useful. In general, robots are scary, yes. Small cap short is good strategy, huh? If you pick the right small caps at the right time. In general, small caps don't do great because they have a lot of problems. If you catch the right one, they're priced low, and then you catch the massive expansion or repricing. So I would say, as a general rule of thumb, no. Be very careful. But overall, usually it works, but you can be very, very wrong and get destroyed on any one name. Go ahead and buy puts on IWM or something, though, probably. Let's see. Tyler Smith broke his rule for following a stop loss too often. Yeah, it happens, man. It's the toughest one too, because there's so much rating of levels and stop losses that you could be like, okay, well, they're just rating my stop, and it's so hard to. It's like creates this 4D chess where it's like, okay, well, they know that I know that they're going to run my stop. But they also know that I know that they know that I know that they're going to run my stop. So they're going to actually just tank it. And they know that I think I know that they're not. So I'm going to hold and think they're going to run it back up, that kind of stuff. So in general, you stick to the rules and it keeps you safe. And if you identify they ran your stop and came back up and reclaimed a level, well, then get back in. Sure, it's probably a little higher, but you'll make your money on the trade in a safe way. And it's not going to be pure revenge trading. So Tyler's saying that this is your first year of trading. The first 2 months were absolutely terrible, so you started looking up people like me to help. Okay, well, I appreciate that. Thanks. It's very common. It's a really tough game. So I think that you're losing out of the way early, and now you're on the uptrend here. And there will be lots of oscillations in that journey, but I think the bottom is in there. All right, Michael Anthony, you love Pfizer. You're always talking about Pfizer. Sure, let's look at Pfizer. I'll pull it up. I have nothing to contribute on in terms of the fundamentals. Pfizer should move up since earnings has been beating the last 3 quarters, with last earnings of a big beat. Okay, and they announced a dividend and an upgrade to 30 this week. Okay, let's look at the chart. All right, let me pull it up for y'all. Okay, Pfizer here. We are coming into a big confluence of support triggers: the daily trigger, the weekly trigger, and the 20 and 9 weekly moving averages. You would like to see it hold in the zone. It would need to break above 2650, this high volume shelf and the point of control, for it to actually be bullish. That would also align with breaking what's called the creek, this level here, which it did, and now it's rejecting for now. So what we're going to be doing is we're going to be watching this zone here, 2440 to 2475. This needs to hold and reclaim, and then we can start being bullish from a technical perspective. In terms of fundamentals, I have no idea. There's our zone right about there. This previous swing low, we undercut it. If we reclaim it, we reclaim the moving averages, and we should be good to go. Let's look back and see what we're digging into here long term. Go to a quarterly chart. Good bottom wick on the quarterly. That's something you like to see. So my problem is that there's not major support underneath until 16 to 17. Call it under 20, like 16, and that's like a big drop. So I can't bottom feed this yet. I would have to wait for a fake breakdown, which this may have been, and then basing, and then it seems like it's trying to reclaim, but this price action is kind of scary, these top wicks past couple days. Then open at the big resistance and then closing at lows. So for me personally, I don't think it's ready yet. I think it either needs another leg down into this zone here, which would be a measured move. I can tell by looking at it right here. Yeah. So one of these two are the 1.6 of this range break. That could be a viable like bottom feeding target area. Otherwise, it would need to do something like this. We need to drop, probably hold somewhere around here, reclaim, and start working like that. So these key moving average clusters would go like this. And then you'd be buying on the back test there. So that's what I would be looking for. I got to say, I don't like the chart. If it can post a strong candle and reclaim this fast next week, then that could be immediately bullish, but I just don't see it, to be honest. All right. Screen no charts? Oh no, I was pulling it full screen too. I'm so sorry. All right. So I will It's been a long week, guys. I'm sorry about that. I will quickly just highlight what I said. This band of resistance here, 2450, 2440 to 2475, super key. The swing low needs to flip it and reclaim. These moving average clusters, this purple, blue, and the small blue and yellow, they're all going to go roughly like this. If it undercuts, we need it to hold around here, and we would buy the back test after it reclaims this. All right, sorry about that. One of those days. Going back through questions. All right, Mike, I like the resilience. So sometimes you can't find the A pluses, and but hey, you took some stabs at things that still looked pretty good, and you managed your position sizes accordingly. And it sounds like you had a good day despite it. So that's awesome, man. They can't all be grand slams, but sometimes you gotta just make money doing the base hits too. All right, Tyler saying made a good profit on SBet shares this week. It covered what I lost on Amazon. Okay, nice. Very cool. I've been trying to make fewer trades each week so I can focus more on one or two at a time. I like that a lot. So SBet, that's a wild one. I'm watching this one. Me and my friend kind of want to buy the dip on this one. So I'm looking for something around 25 to 23-ish for these to curl up, catch, come up and clean up this weekly trigger here. I think it's a squeeze potential. So this one, cool one to watch. I assume you might have taken it short. This is such a clean short off the weekly trigger, man. Interesting. SBet looking for this to come back to to a balance zone, 50%. Oh yeah, let me throw a fib on there. On this expansion range. So I don't know where you would put it. All the way down here? Seems okay. Trying to hold the 6.2 fib. Makes sense. If it can't, then it pukes to the 5, probably undercuts it a little bit. Maybe goes to the 0.62 on the other side right here. 2270, yeah, that'd be really nice. So yeah, let's watch what it does at 2850 here. That's the big level. All right, bought it at 17 and sold it when it struggled today. Wow, okay. Bought it at 17. Jeez. Nice entry. Wow. So even worst case, you made 69%. Nice. Very cool. Great trade. And I bet if we look at the hourly on this parabolic move, see, got in at 17. Oh, perfect. Right off the daily trigger back test. And then it just rides the hourly and the shorter term moving averages all the way up. And then loses short-term moving averages after tagging into the key trigger pre-market. Flushes the hourly, gives you a chance to get out above, but now you know that momentum is down. Double top, puking. So yeah, interesting chart. Good mover. I'm going to keep an eye on this one. And into the value zone of this current little leg up. So could see it run stops down to here, to the 50 of this one, and then catch. Could see it nuke down here, which I would really like to buy it. Cool. Let's see, James with some charts. Sound, Snap, and AI were my winners. Very nice. I have a little bit of sound left. Some runners. I sold most of it up here and right back there. Sound, still cooking. Still cooking. Weekly Bollinger Band still squeezing. It should keep riding this up to 15 at least. Probably higher. Probably higher. AI doing something pretty similar. Yeah, weekly Bollinger Band squeeze. This one's still stuck under longer term moving averages, longer term triggers. So might be ready. Might be ready. Let's see what it does. Around 31.50. And snap. Ah. Some old scribbles. Snap with a nice push. So here we have a nice reclaim of the weekly trigger here. Nice consolidation into it for the past couple weeks, curling up. The daily's now pushing up. So we have a crossover, a bullish crossover that's going to occur here very shortly. That means blue trigger comes up over here, over this one. That's a bullish signal there. And then that becomes the new support that we buy off into as we go up. Assuming we go up, it's got to get through the 200-day, which is clearly bopping its head in right now. But I would look at this big volume shelf and say, okay, we pushed decisively off of this one. Probably we can run it up to this one here, 1075-ish, 11. Nice. All right. We got Joe watching SBET, Circle, and Ethereum. Yeah, I mean, I love all of these long term. I think Ethereum breaking out, it's going to go through all-time highs. Easy now. Yeah, wow. And then we talked about SBET, and then Circle came screaming back to life and just ran a bunch of stops. I think that we look for a spot to buy this. It's trying to hold the hourly trigger here. I was watching this into close. Under it, though. I'm getting tight again. I think it needs to make one more move down here. And I'd love to buy it off the daily trigger. Pretty aggressive, though. Maybe it comes back for this big volume shelf at 201. That little imbalance there as well. I do think this is still in an uptrend and trying to move up. What we don't want to see is something like core weave, which here you could argue it was like still holding flag structure, but then it just started puking horribly. Like even here you could say still holding flag structure. Man, I was saying if it comes back here, I wanted to short it and I missed it. Darn. So we're going to keep an eye on that. In general, it looks pretty different to me, but maybe this 10-day moving average is what we should look to see if it responds to. So that's 212-ish. 212 seems like a spot that I'd be interested in buying, but doesn't meet my system. So not there right now, that's for sure. I sold most of my circle at 210 and a little more at 230. And I'm out, but I want to get back in. All right. Well, I think that it is right at the hour mark. We've been going over an hour. I think it's a good place to call it here, guys. So next week we will be doing Bollinger Bands, how to read Bollinger Bands, Keltner's channels, and how I use them to identify squeeze setups. So I will show you what I'm talking about. So Bollinger Bands are this big gray band here. And then Keltner's are this darker gray, thinner line here. So when Bollinger Bands squeeze inside of Keltner's channels, that's a very good indicator of an impending increase in volatility. So that's why, right in these 3 days here, I was a big buyer of coin because it was very, very tight. The Bollinger Bands came in really tight, way through the Keltner's, and that's how we caught this explosive move perfectly. We got in at the high of that day. Currently up 70%. So in 2 months, not bad. A month, yeah. All right, so learn how to do this next week, hopefully. When it works like this. I am pretty fried here, so I'm going to head off. I hope you all had a great time, had a great week. Enjoy your weekend, and I will be in the Trade the Pool Discord server for 15 minutes, half an hour after this, if anybody wants to hang out and blow off some steam, because it's been a long week. So thanks for tuning in, guys. I appreciate y'all, and have a good one. Take care now.